here to attend this today's session on regulation and compliance. Uh, we a little bit about first about the community of practice, which is organizing this event, this virtual knowledge event today. Community of practice is Grameen facilitated. It's a knowledge forum and community in which we deliberate and discuss on various topics related to the BC ecosystem, BC channel. One of the things that comes many of the things are discussed, but one main thing that comes up again and again in the discussion is about the challenges that the BC sectors face. And those challenges we have seen most often fall under the five priority areas that we have identified. On out of which one very important one is a regulation and the compliance. Now, we have had our discussions since it is a very critical topic. We've had our discussion on regulation and compliance sometime before as well, in which we had eminent speakers from FIA Global who spoke on the challenges that they have seen, that they have faced in the regulation and compliance in the BC sector, and some recommendations came up, what could be the mitigation strategy, etc. Since this is a huge topic of huge importance, so we decided on demand actually that there should be a second session on this topic, and so I do not want to actually speak about what all was discussed. I do not want to give a summary, but at the end of today's session, I will see how many of those things that have been discussed and how many of those recommendations that have been discussed in the first session also come up today. And if yes, if then very well, then we understand those are, like written in blood, as we say, or engraved in stone. Let me not go violent, say written in blood, but engraved in stone, critical issues and critical recommendations. And we will see how, there will be a second set of discussions sometime back, sometime later on how we can implement those recommendations. But if there are different perspectives today, so that's also very interesting. Then we can discuss why some people think that, the recommendations should be XYZ and some other people have some different ideas. Why some people, some of, and when I say people, I actually mean the industry experts, the senior leadership from the industries. Why some of them feel that this is a challenge, but some others feel, no, that is not a challenge. It should be like this. So one of the criticism, for example, that we have seen of the regulations and compliance in the BC sector is that they're very strong, very strict. We have also heard the version that, they should be strict and strong. This is a financial sector. If you make them too relaxed and too malleable, then perhaps the financial inclusion, the interest of financial inclusion will not be met. So we don't know. It could be yes, it could be no, and there could be yes and no, and there could be a midway. So in today's discussion, we will ask all these questions, and the one extra question that, from our side that we are most interested in our project of testing innovations in BC channel, under which community of practice is a knowledge management practice initiative. The question will be, if we make, if at all we have in this sector the regulations and the compliance requirements, if we do make them too stringent, if we do not relax them, will that still foster scale, service quality, and innovation? Most importantly, can we come up with innovative interventions given the context of very strict, non-malleable, non-flexible rules, regulations, and compliances? Or will that actually cut down some of our efficiencies? So that is the topic for today's discussion. We have two very important speakers today. Let me introduce Mr. Sunil Kulkarni, whom all of you know already. He's the CEO of PCFI, and nothing else needs to be talked about him. He has been on many of our forums and many of the other forums organized everywhere. Prolific speaker, Mr. Kulkarni, welcome to today's session. We also have Mr. Ajay Desai. So Ajay is not the first rodeo for Ajay on Eco India platform, which is a virtual knowledge platform, but it is he has been here before, and he has talked about various, other challenges, some of the other challenges that uh, that is faced by the BCC ecosystem. And I remember, correct me, Vijay, if I'm wrong, that I think the discussion in one of the previous discussions we discussed about the business modeling. What will
Yes.
be, because we keep on talking about sustainability. So what is
Your business.
sustainability
Yes,
in the
yes.
context of the BC channels, and what should be the business modeling? What would be the kind of viable with business modeling that will also be sustainable? And we talked about both sides of the lines, the pros and cons, this and that, and it was one of the most interactive sessions that we have. So in today's session, Ajay has will be the moderator, and there will be some very critically important and interesting questions that he will be asking Mr. Kulkarni. So one of the things I want to say, that we always have our formats where we have a moderator usually from our side, and it's a panel. So today we wanted to twist, change the format a little bit. Today we wanted to have two very important persons, leaders from the industry, have an informal chat. So our learnings, whatever we will learn, will come out from the tete-a-tete, as we say in French. So some informal chats. Okay, so and this was not the format which was discussed with Ajay until this morning, but he has been very nice about it, and he's looking forward to having that informal chat with Mr. Kulkarni. So Ajay, by the way, is the co-founder of Saka. So I'm sorry I did not introduce him. So he's that, and my introduction is, all of you know, but you get bombarded by my emails. My name is, I'm Dr. Siparnadatta, and I am a knowledge manager with Grameen GFSI, Grameen Foundation for Social Impact. And community of practice is a knowledge management initiative which I lead. So with that, it is over to Ajay and Sunil. Thank you.
Thank you, Dr. Suparna, and grateful for this innovative initiative of community of practice. And now, before we begin, I would request Sunil sir to give a brief background of himself, especially to elaborate. We know his current position, but he has been associated with the BC industry for long in various capacities. So I'm requesting him to just take us down the memory lane, talking a bit about what all positions he held, where he was having interface with the BC ecosystem. Sunil sir, over
Right.
to you.
Yeah. No, thank you. Thank you, Ajay. So, my intro is that I had spent about 9 years in Siemens in the telecommunication side and semiconductor side. Semiconductor is becoming now a very buzzword in India. So, I was head of semiconductors in Siemens. And 9 years I spent in Motorola. That's where the mobile communication infrastructure. So, we are talking about public DPI, where Motorola had the very large mobile infrastructure in those days. And then in 2004, when there was no word called startup or there was no word called fintech, I set up a fintech startup called Oxygen. And that was initially to do services aggregation, convert cash to digital. We started with recharges, bill payment, travel ticketing, etc. And the entire BC model that we see today, the BC limit, was the trading balance model of Oxygen that was started way back in 2004, much ahead of the time. So 2004, when I started Oxygen, this was in 2010 is when I signed up with. I was the co-founder of Oxygen and I signed and CEO of Oxygen, and I signed up with SBI. And when I signed up with SBI as a BC in 2010, I had already 1 lakh outlets of Oxygen in retail. And SBI told me that we'll give you 25 IDs. You first show us how these 25 IDs will work, and then we'll give you more business. So that's how we started that 25 BC points in 2010. Then SBI had their own mobile wallet called State Bank MobiCash, because Oxygen had their own mobile wallet called Oxygen Wallet. So based on Oxygen Wallet technology, State Bank of India launched their model called State Bank MobiCash, which was a full KYC model operated from bank branches for KYC, and that's why it didn't take off that much. After that, KYC rules, Aadhaar, etc., have come up. But a lot of these initiatives have been, I would say, ahead of time. So that's where the BC business started with Oxygen, and although BC guidelines came in 2006, the actual guidelines permitting not-for-profit company to for-profit company happened in 2010-11, and that's when Oxygen joined this business model for launching the BC business across the country while it was rolling out its mobile wallet business. And there, as the demonetization happened around 2015, Oxygen launched its own micro ATM, which was on POS terminal and micro ATM. In 2016, where the terminal was doing AEPS cash in, cash out. Again, the very first one to do that. The other one was IDFC Bank on a tablet. So, and then leveraging on the IMPS, Oxygen tied up with Yes Bank. Ajay was the FI chief, and Anand Bajaj was the chief innovation officer. Oxygen launched money transfer service on BC as well as on wallet in tie-up with Yes Bank, and the escrow was with Yes Bank and ICICI Bank, and moved forward. 2020 is when I exited Oxygen and started advisory. So I currently for the BC's industry, BCFI, as the CEO of BCFI, I work on policy, working with regulator, minister, banking association as to how BC industry becomes more and more viable towards compliance and regulatory compliance as well as field compliances and in terms of processes and standardization. On the other hand, I also do advisory to fintech startups and some of the banks, HDFC Bank and Airtel Payments Bank and FinCare Small Finance Bank for digital banking, digital distribution, and digital credit and digital commerce. The work that we are right now doing is also working towards an SRO for fintech via BC, and that's a work that is in the works. And towards the BC viability and BC compliance, the SRO would be very useful. So yeah, so that's my introduction, Ajay.
Thank you, sir. Thank you for taking us to the down memory lane. The BC developments. It was indeed an interesting time. Doing some mistakes, learning something, recorrecting, consulting RBI, and all these things. So from sir there directly, I would like to bring you to the current time and the most pressing issue with respect to the recent guidelines on BC certification. I understand the whole industry is facing a lot of challenges, and you have been at the forefront of taking this issue on various forums, including DFS and all. So, sir, would you please elaborate a bit on these recent challenges around BC certification?
Right, right. Yeah, BC certification has what has happened in the 2005 to 2016 era is that predominantly banking BCs were doing like traditional, I would say, PSU bank BCs. So they had account opening, they will have cash in, cash out, they will have services that are there for BCs. It is 2015, 16 onwards, the mobile Aadhaar, the classic Jandhan Aadhaar mobile, Jam Trinity, that is where number of opportunity emerged. People like Yes Bank, RBL Bank, IndusInd Bank lately, and Kotak Bank lately, and Yes Bank and ICICI Bank. They came up with a business model where they only worked on two services. One was the IMPS, basis which the domestic money transfer service started, and I think Yes Bank started the very first one. The second one was the Aadhaar cash in, cash out, using a not a fixed point outlet, but a mobile with a biometric. So the mobile of the PSU bank went to villages, opened Jan Dhan accounts, and came back to branches. Once they came back to branches, servicing those accounts became an issue, and that's where these private sector bank put mobile-based BC outlets, which were not fixed point outlets and were typically doing only two services: in urban domestic money transfer and in the rural cash in cash out of AEPS. In fact, a lot of intra-city cash-in also was done through domestic money transfer. As a result, today we have, thanks to that particular innovation, today we have, in terms of unique outlet, almost 15 to 18 lakh outlets pan India, which are only doing DMT and AEPS transactions. Whereas the classic BCs, which were doing all services, are in the range of 300,000 outlet, 3 lakh outlets. Now, these 3 lakh outlets versus 20 lakh outlet created a kind of issue, because today, when we started from 2006 to now 2025, the RBI guideline did not differentiate between these small kirana store working as a multi-service outlet versus the 3 lakh dedicated banking outlets who were doing only that business and nothing more. And as a result, there are specific usage, because if you are doing account opening, if you are doing credit facilitation, if you are doing liability products, if you are doing government scheme, etc., etc., there is certain amount of training that is required, and that training was required to be given to bulk of these 3 lakh outlets. So the entire focus of Department of Financial Services as well as the regulator was to make sure that when these outlets are, by the way, called banking outlets. In the definition of RBI, they are called banking outlets, which is a very big thing. The moment any outlet is called banking outlet, reputation of the sponsor by RBI to make sure that those banking outlets go through these certification, and they gave time after time after time, multiple time they were given, and after that the deadlines were given, and these deadlines are now over. That by 31st March 2024, all these outlets which are already in the market have 9 months time, which is 31st December 2024, and that means any outlet which is not certified cannot operate further, technically speaking. But when you talk about these 3 lakh outlets, that requires almost a 700-page manual to go through, give exam in a specific center. You have to get out of your shop, go there, first carry out some 28 or 40 hour of training, and then go to those examination center and give that exam. So while it was making all the sense for these 3 lakh outlets, for the 20 lakh Kirana stores, which were doing only DMT and AEPS, it was not something that was working out, because it was several things that they were doing. So it was not a service which was giving them livelihood. This was clearly a servicing issue. I would give you an example of telecom connection and telecom recharges. Today, even today, after so much maturity, there are about 20 lakh recharge outlets and less than 2 lakh new connection. So it is very similar to the banking outlet versus payments BC outlet. So these outlets do not have strictures from TRAI on just pure recharges, whereas the telecom connection outlet, they have to go through the CAF form, do eKYC, everything that typically you need to do and get the new connection done. And there are very strong strictures on that and getting it done. So we have then went back to ministry and regulator and IBA, and we mentioned that while you have initial and advanced certification of these BCs, there are these 20 lakh BCs that does not mean such a advanced level certification. We called it as a level 0 certification, and that level 0 certification could be potentially online, even done by bank, and even the examination, we call it as a proctorless examination, which means there is no proctor who is there for the examination, and there are now very sophisticated advancement in the technology by which it is very difficult to cheat even if you are doing it in your own shop. So the proposal that has gone to ministry is that we should have a proctorless, layered, modular examination. If somebody is only selling these two, and by the way, on the merchant side, you have cash at POS, which you can withdraw 2,000 rupees and 3 transactions per day is allowed. So 6,000 rupees cash out you can do. UPI is P2P, P2M is a money transfer. So these two, DMT and cash out, are in different form available on merchant payment as well, but
Yes.
there is no certification required. So what we are trying to impress upon is that we should have the current structure for banking outlets, which are doing all services, and for selected DMT, AEPS outlet, we should have a modular, proctorless online certification, which the merchant can do sitting at his shop. Otherwise, these 20 lakh outlet, bulk of them will go out of service.
Sir, excellent suggestion given by you and your team, sir. And I hope DFI pays attention to this pragmatic solution. Generally, sir, the BC model has evolved because RBI has taken progressively pragmatic steps. So I wish and pray that prevails, and again there is no regressive step being taken. Let's hope so. And sir, with this, we'll pause for a minute and open the forum for audience question so that we can make our session more interactive.
Right.
So
Thank you.
any questions on what we discussed so far from the audience, please? Please raise the hands.
I think there's no question at this point, so
Sure,
we
sure.
can
No
continue with
problem.
the chat.
Yeah, we'll move ahead.
I mean, there's a
Follow ahead.
stunned silence, so okay.
Yes, not
Let's
an issue.
continue. Let's continue, yes.
Yes, sir. So Sunil sir, I will ask you 1-2 pointed questions one by one, and somewhere in during that discussion also we might be able to address some questions. So one question is often about the cash insurance. So the cash with BC, whether it's bank cash, BC cash, how it is insured, how it is secured, etc. So sir, any views from your side on that?
Yeah, I think there is more than me. There is already a view by RBI on that. So there is a RBI circular which says that the cash with the BC is bank's cash, and it is required to be insured. And there is a very specific circular that says that it needs to be insured, and it is bank's cash. It is not BC's cash.
BC's cash.
The reason why it is being bank's cash considered is that any funding that is being done for cash in or DMT needs to be pre-funded, and any cash out which is happening, again, bank needs to make sure that there is adequate availability of cash at the BC agents level. So RBI has mentioned this, but unfortunately, currently, none of the banks have taken this particular model and tried to ensure, because of the major issues that they face, that typically such cash insurance is a extremely high cost insurance for
Yes.
them, because it's where while you can do fidelity insurance of employees, uh, tep- technically, if you want to call BC agent and as employee, which is the reason why today bulk of the direct BC of bank have shifted to corporate BC. The reason for that was that when these SBI had, for example, had at one point of time 50,000 direct BCs, which means
Right.
there was no corporate BC in between. Then at different state level, the labor issues came up that these are employees and
Right.
you need to do PF, you need to do gratuity, you need to do all those things. And whereas it was a business for a bank, it was a business. So what then happened was that SBI took one decision that we will move all these direct BC to corporate BC, and the agreement signed between corporate BC and bank was principal to principal nature, so that it is not a principal and agent or principal
Agent.
and employee situation. It was a principal to principal, and even the agreement which corporate BC is expected to sign was that of a principal and agent situation, where the BC agent is not an employee, he is an agent, and it's a business that he is driving. When such things are there, then doing the cash insurance is a, it's not that it is impossible. Everything is possible. But I think first of all, banks were not keen to do that unless there is a enforcement by regulator on that particular circular. This will still be dragged along by banks for the cost reason.
Yes, sir. Yes, sir. And sir, there is even a practical issue here, that is typically banks obviously take cash insurance for their branches, and that product is cheap because there is a voluntary deductible.
Correct.
And typically that voluntary deductible is 50,000 rupees, 1 lakh rupees, 5 lakh rupees, like that.
Correct.
Big amount.
Correct.
So therefore the policy is very competitively priced.
Correct.
But
Yeah.
unfortunately, when we talk about BC, even if a 5,000 deductible we keep, then the policy becomes senseless.
Absolutely, absolutely. Yeah, you're right. So they have done the branch level insurance simply because branch there is no third party. It's employees.
Employees.
So it is employee versus employer, and that insurance is easy to manage even in the insurance company. And
Yeah.
second is that the cash involved itself is so large that you are talking about crores of rupees or lakhs of rupees. There, the voluntary deductible, which is typically there even in medical insurance,
Yes, sir. Yeah.
you need to have certain amount of deductibles just to make sure that it is not being misused. And therefore, this policy works on branch level because branch has a infrastructure and employee relationship. But at an agent level, where his daily cash may be anywhere between 5,000 to 10,000 rupees, and just that cash, if it is gone for any reason because of dacoity or any reason, that 10,000 rupees itself will become a deductible. Then it
Yeah.
is infructuous agreement.
True, sir. True, sir. So while at Yes Bank, we had tried to get such insurance for our credit BC partners,
Right.
but there also we face the same problem.
Correct.
And insurance company said that though credit BC also has got a safe deposit halt and everything in his branch and some control, obviously those checks and balances are not at par with those at the branch level.
Right. Right.
So therefore the risk, perceived risk is higher. And again this deductible versus claim kitna ho sakta hai, so we finally gave it up.
So I personally believe that technology is likely to solve this. As we speak, you
Yes,
have
sir.
seen MobiKwik and Cred, they're launching CBDC,
And
central bank digital currency. But my personal belief is that central bank digital currency has more relevance in rural than in urban,
true,
simply
sir.
because today you have, despite 600 to 700 million smartphones and 600 million WhatsApp monthly active users, you still have anywhere between 250 to 300 million monthly active UPI users. So where are the balance 300 million who are smartphone data enabled? So they
Enabled.
are currently wary of touching their bank account
Yes, sir.
Because they don't want to touch their bank account, they don't use UPI. But the moment you find that you are downloading CBDC on your mobile, and after that there is no connectivity to core banking, you are a stored value currency
Correct.
on your mobile, which is interoperable with UPI QR code. I think the next level of digitization can happen where part for an AEPS cash out, you could do part physical cash and part CBDC,
CBDC, yes.
so that your cash requirement will go down significantly.
Very true, sir. Very true. And that is a challenging situation. Thankfully, what we are observing in field is every rural family has got at least one CTO. That
Yeah,
younger at least he is working as a CTO. So though the parents may not be comfortable using a UPI app regularly on his EA, but sometimes he will take his kid along and he will do the UPI transaction on behalf of his father standing there.
absolutely.
Yeah.
Absolutely.
Then
Absolutely.
sometimes what we have seen is, especially in case of agri retailers, agri input retailers, the farmer will come and give his mobile to the retailer and say, okay, you transfer the money yourself.
Correct, 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 correct.
So that also is there, where there is a trust and a long-standing relationship, people
Right.
do. But obviously this has got a limitation. So CBDC is really good answer.
Yeah.
We need to just position it properly and promote it dispassionately, in the sense there should be some agency promoting it like mutual fund sahi hai type.
Correct, 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 correct.
Sectoral level promotion will be required.
Right, right, right. No, I think this is absolutely a right thing to do, and I would personally, I'm personally of the view that there would be next level of digitization happening from CBDC, especially for smartphone people. And these smartphone people, customers can then say that, my mobile is now ATM. Because
Yes,
there's actually currency
yes, yes,
inside.
yes, true, sir. Yeah, in fact, there was some advertisement. I think Anand has considered that, Anand Bajaj,
Yeah.
that the nearest ATM कहाँ है? तो आपके जेब में ही है. Something like that.
Yeah, yeah. So what Anand was referring to was the agent's mobile working as an ATM or
ATM,
micro
yes,
ATM.
yes.
But now this would extend to the consumer. That
Correct.
a consumer smartphone would also have digital currency,
Currency, yes.
which could be provided by agent. It is not
Agent.
necessary he needs to do self-service. It
Yes,
could
yes,
be provided by agent, and that is
yes,
something that if we do, let's say AEPS cash out, which is part digital and part physical, then that is a starting point, because the moment that cash is taken out, the customer knows that he has 2000 rupees worth of digital currency, which he can either transfer to anyone P2P, or he can even do P2M to any QR code. There are 200 million QR codes
correct.
plastered all over the country. So he can pay that through that. So I think at least he does not have that fear that his account is compromised or his account is being touched upon. And that's where
Yeah.
I would say that next level of confidence building measure is
Yes,
CBD.
yes, sir. True, true, true. So, sir, we'll take a small pause here for any comments, observation, questions from the audience. I think either we are doing extremely well or extremely badly because there are no questions.
I think it's actually so insightful. So people are busy taking notes.
Okay.
And there might be some of us like me who are not from the industry. So for them, many of these things are for the first time hearing, our discussion on the regulation compliance previously, Sunil, I would like to say that it was more from the evidence from the field. Like how do they feel about it when the BC agent side of it and also the customer side of it. So the discussion hovered around that. So today we have from the a little
Macro view.
different perspectives. Yeah, different angle, different perspectives. And for me, it is all learning. And I think we are stunned, as I can say that we are speechless, and there could be so many ways of looking at a challenge, and there could be so many nitty-gritties. We do have some of the industry stalwarts present here today. I know C dot, the chief of C dot, Mr. Kalyan is here today. If there is any question from C dot, because Mr. Kalyan also is a very prolific speaker and he always comes up with very insightful questions which add nuances to the discussions on our forum. We also see one of the previous speakers, Chandranath Ghosh from FIA Global, who's a senior manager and is in manages fraud investigation in FIA Global. I see, and has been a very good speaker on the issues of regulation and compliance, taking the evidence from the field. Yes. So if there is any question from the audience, please, this is the time to ask Mr. Kulkarni. If not, then Ajay, let us continue with the
Sure.
chat. Okay.
Yeah.
Kalyan, yes, Mr. Kalyan has a question. I think.
Yeah.
Yeah. So, hello, Sunilji. So hi, everybody. So, just as you were just highlighting the insurance part of the fund, because actually we do face a lot of problem nowadays of cash transactions issues, frauds, then robberies and all those things. Still, the problem is, even if RBI says it's bank money, but the fund which comes to BC level, it is against their their FDs. It's always against the FDs. So bank still doesn't consider it is our money. It's your money. You lose it, you lost it. Despite that, is a very costly affair of getting all the transaction insurance done. So what should be the ways and how the insurance companies should come forward in a way to make affordable for the BC agents, because this is high time because cash transaction is going on, and always the BC's centers are deprived of cash. The major problem is they don't have cash, and even if they have cash, they are facing problem. So how the insurance agencies and the government can take a proper step to ensure that BC get their this thing insured, despite the fact that even if the banks are not responding to the requirement, and the BC has to cough up a lot of money for that. So
Yeah.
this lot of our problems, we have not been able to do that.
Yeah. No, I think I agree with you. I'll tell you, if I'm in insurance company shoes, insurance is a business where they bank on statistical probability that if there are 10,000 agents and 10,000 agents are paying a premium of 1,000 rupee annually, so I have 1 million rupee available with me. If there is a fraud which is in the entire year less than 1 million rupee, I can take that and I can pay the agent this particular thing after some certain deductible. But if it is 1 million rupee collection of premium and fraud of 2 million or 5 million or 10 million, then it's a loss-making business to insurance company. The entire business model of insurance banks on the fact that it is being done with this kind of business model, and typically you would not get those many claims. If you start getting claims, which happens also nowadays in medical insurance, if you get too many claims, the insurance premium keeps going up and all that. So what are the options? One is that first of all, the regulator has to enforce that on the banks that they need to do it, and it is not what bank will do is bank will insure and put the cost to corporate BC. That's not the solution. So the bank has to take that cost into account of doing this business. And today I would go and say that because of Jandhan account, we have 50 crore accounts and we have 2.2 lakh crore balances. Now, 2.2 lakh crore balances are today doing, and today bulk of the banks are facing CASA deposits issue. If 2.2 lakh crore have been created, which are at 2.5 to 3% interest because it's a savings account, typically any bank would minimum give any loan at 9%. which means 6% is the net interest margin on these 2.2 lakh crore. If 6% is the minimum margin on that, that means 13,000 crore is the interest earning on these 2.2 lakh crore business. We should request RBI to allocate a portion of this, let's say 50 basis point or 75 basis point of this Jandan account towards allocation of insurance premium. Because if there is some premium subsidy that is available, it has to be coming from the earning only. It can't be coming from outside. It has to come from there. So let's say 50 basis point if we are allocating, that means on 2.2 lakh crore, we are giving 1,000 crore. 1,000 crore is a very large amount on the insurance premium, where we could potentially get a large number of insurance company interested in doing this for these agents. But that kind of thinking needs to be built, and it is not something that can come up overnight. So, since you have mentioned this, I will also mention in my next meeting with DFS on monitoring committee of this cash insurance by virtue of, let's say, 25 or 50 basis point coming out of CASA deposit in Jandan account.
Sunil sir, excellent suggestion. Very, very out of the box thinking and very pragmatic one. Thank you, sir. And please do pursue this with DFS.
Right. Thank you.
Sir, this brings us to one more often debated and a issue of GST on BC services. So,
Right.
would you please elaborate a bit on the GST issues around BC services and how you are trying to address it or solve it?
So this is another moot point that many places this is creating issue. So what is happening is that today the GST exemption exists for BC services in the rural branches, or I think it's the exact name in the GST Act is rural account or rural branches. The way to so any services of BC for a customer who belongs to a rural branch is not chargeable with GST. Now the challenge is that when you do this, you can do this for honest transaction, which means I know my BC, I know my customer, and I know my branch.
Branch.
There is enough ring fencing of compliance that all these services will come under the bucket of GST exempted services. But as I told you that there are 3 lakh banking outlets and 20 lakh payments out BC outlet. Almost 30,000 crore rupees worth of monthly transactions are AEPS cash out, which are offers.
Offers.
Even on the banking outlets also, offers transaction happen, and those are again belonging to a bank.
Yes, yes.
There is no currently flag available which says that this IFSC code belongs to and in case of Aadhaar, you won't even know that you are just knowing
Yes.
an Aadhaar number and bank name. You don't even have a branch code.
Branch
So
code.
there is no way to do Aadhaar cash in, cash out or DMT to be tagged as belonging to a rural
Yes.
branch, and that's the problem. So we had submitted proposal to DFS, and DFS set up a committee for monitoring of BC, and in that was headed by Dr. Shetty, who is now the chairman of SBI. That time he was the MD of SBI, and they have given a recommendation that since it is very difficult to manage this, and it is going to be an operational nightmare. Because the BC services are services which are typically handled at BC level only. So nobody is going to, the person who is having a mobile banking app and he is sending money, anyway, it is free to him. So on free, there is no GST.
GST.
On DMT, there is GST because there is a charge.
Charge.
Similarly, on cash out, etc., nobody will go to a BC outlet if he has access to ATM and get the cash out done. So instead of levying such a high 18% duty, and there are the other second issue is because majority of the bank revenue, I mean, if you look at classic banking, the bank's revenue is on interest. And on interest, there is no GST. Because there is no GST on interest, banks have been given the counter punishment that anything other than so your GST credit will be 50% only. So there are large number of banks who have gone ahead and created their separate payments division and created separate GST number, and there they get the GST credit. But a large number of banks do not get it. So if you do not get it, then 18% which is charged by BC agent, only 50% of that credit goes to the bank, which means effectively the cost to the bank is 18 plus 9, 27%. So the charging to the BC agent, which in turn is in case of DMT is passed on to customer, is 27%. So for a financial institution customer having this kind of GST is extremely, I would say, unfair. So the monitoring committee has given a suggestion that instead of having an exemption or any rural versus urban versus this, please keep entire BC services. Note, only BC services, not other money transfers. BC services to be at 5% GST. So that has been given as a suggestion to the DFS. DFS is taking up with the GST authorities, and hopefully positive things will come on that.
That will be a great development, sir. A long-standing headache for entire VC industry.
Right, right.
And there had been issues of inquiries, EA orders, then penalties.
Yeah, because there's again the onus of proving that this is rural branch is first on the BC agent, then on corporate BC, and bank is easy. Bank is easy because it's their branch, but it is very difficult to prove that.
True, sir. True, sir. So many people have faced in the BC ecosystem have faced challenges, harassments, fine notices, and all.
Correct. Correct.
This is also, sir, a good initiative of BCFI to address a long-standing pain point.
No, thank you. Thank you.
Thank you, sir. And again, we'll take a pause for any questions on this item or any previous items that we discussed.
Kulkarni Sahab, just so my one question, this query, I'm just talking about bank BC since we work with the bank BCs only. Banking transaction and income from banking transaction has come to a level where you hardly see there is marginal growth or the very, very, very marginal growth in the income of BC through transaction, cash in, cash out things and all. So now the things are open up that different kind of opportunities and one of the major opportunity is loan collection of the bank. But the problem which has now started coming, there's earlier BC were collecting loans, they were getting commission. And this is a good opportunity, I think this is a very good opportunity. But the banks are insisting now to get the DRS certification. So one, BC has cleared IIBF. There's one regulatory requirement that you have to do, I think. Now, in many banks where our BCs are working very good, and bank has interested them accounts, but they have to now go for DRS certification. So DRS certification, which is completely a different kind of certification, for which they have to attend 2 months classes, online classes, then have to appear, and the success rate is 20% or 40% pass out, 60% fail. So the my request, even the BC, if I can take it, can this course or certifying BC as a collection agent, there become some liberalization, like IABF's now training has come to 25 hours training. So now many are clearing it or getting it. So is there some scope where BC can clear their DRS certification and they are eligible for loan collection? Because loan collection, I have seen BCs are making, those who have cleared are making good amount of money per month. So, and that is very good opportunity for BC as well. So how to go about it where BCs clear their DRS certification, or there's some alternate mode, like as you say, the non-banking VC, there are zero something like that, they can clear the account and they can get certified. So there is a need for that also, I believe.
Yeah, I think Mr. Kalyan, yeah, this is an excellent suggestion. It didn't come to me earlier, because when the BC courses were basic and advanced were being discussed, we could have suggested, we can still suggest. What we can suggest is that let it be part of the advanced certification. The reason for DRA, and I think if I'm not wrong, DRA stands for Debt Recovery Agent, isn't it? So debt recovery agent is a very, very strong banking service. And historically, in the past, even in urban, there has been a misuse of banks using strong arm tactics to recover debt. See, typically, this is where bulk of the provision of banks are taken when there is a loan which becomes 30 days, 60 days, and 90 days old. So that becomes, and they call it SMA 012 and all that. So when it becomes an NPA, that's when it has to be provisioned in the bank's balance sheet as a potential loss. So bank's balance sheet is impacted by that, and they take it in, I think, two or three tranches, but they need to take it. And therefore, banks have been extremely aggressive in the past till RBI came up with a very stringent rule of how the recovery needs to happen. Now, this has happened in the urban where there is a reasonable amount of literacy and reasonable amount of even enforcement that you could potentially check through different level. The DRA certification is meant for not only giving the information about what to do and how to do, but also make sure that the recovery is done in a manner which is graceful to the customer. It is not a gundagardi that can be done to pick up the money from the customer, because the status and stature of a rural customer is very different than the urban customer. The ticket size is smaller, the ability to repay is smaller, bulk of the earnings are very seasonal in nature, unlike salary in urban. So if there is a crop which has gone bad, then the entire year's income is gone, etc. So DRA certification is required. What is possible is to see what is relevant for rural India, and accordingly put that in the advanced certification of the IIBF. And the moment you do IIBF advanced certification, you are automatically DRA certified. It is something that I can take up with the IBA and DFS as a suggestion for viability of BCs. And it is actually in the best interest of banks to do that, because not only banking outlets, then yeah, based on that, there will be more payments BC who will get encouraged to become banking outlet. It is not that they don't want to do it. They see that it is too much of a hassle compared to the current structure that has been built. So those who have been building those who are building the banking outlet, they don't see anything else. They just do that. Whereas there is a scope for a good balance between a banking outlet and a traditional payments BC outlet. And these new revenue streams can come very handy. So please write to me about what you think in the current syllabus that can be omitted, what can be kept, and then I will go back to IBA and DFS that this is the suggestion from the BC industry. It's a very good suggestion.
Sir, I would like to add to what Kalyan sir said. Uh, in banks, already the system exists where they classify customer, defaulting customer in two buckets. One is called soft recovery and another is called hard recovery. So
Right.
customer is first kept in soft recovery bucket, where polite calls, gentle nudging, etc. is done by mainly by bank staff. And when they realize this customer is not going to budge with soft emotional tactics or emotional appeal, then they transfer the customer to hard bucket. So similarly, we can also have a classification for BC agents in the DRA scheme. There can be two. Level 0 certification is for soft recovery and level 1 certification is for hard recovery. Something like that.
Absolutely. Absolutely. No, I think for each of these matters, keeping it very digital is very difficult.
Yeah.
There needs to be layered approach.
Yes.
Because हम कहते हैं ना हिंदी में गधे घोड़ों को बराबर कर दिया, तो हमको गधे घोड़े बराबर बराबर नहीं कर सकते. We have to have layered certification. What is meant for one is not
Yes.
meant for other.
Other. Perfect, sir. Perfect. Any other questions from audience? Inputs, comments, anything? Sir, Sunil sir, any other aspect, important aspect that we have not touched so far, which you would like to just at least highlight in a brief?
We are right now also saying that today the product is a hostage of what bank gives, and product innovation is not possible at a corporate BC level. So we are working on making sure that can there be a complete overview of BC structure itself, and you could make BC as a regulated entity. You have BC as a regulated entity. Bulk of these payment BC transactions, I could club them under payment aggregator BC. If you club them under payment aggregator BC, they could be a regulated entity which could be directly under DPSL. And
yeah. Some tender passa
correct,
we can
that's
consider.
right. So something that like that, I have made some papers. I have also published it. That they could be. There is a CII group which is on financial inclusion. Yes Bank MD is chairing it. We are moving a paper from CII Financial Inclusion Group to regulator that BC should be considered as a regulated entity.
Great. That will be good initiative, sir.
Thank you.
Okay. Thank you, sir. Thanks for your insightful discussion and inputs given to all. And I'm sure our audience must have benefited from this. And now that we are coming to the end of our session, I'm handing back to Dr. Suparna for other formalities. Dr. Suparna,
thank you for calling me.
Thank you, Mr. Kulkarni. Thank you, Ajay. It was a wonderful session. As I said, that all our knowledge sessions, the reason that we have a community of practice is that we can share and exchange knowledge, because it's a knowledge economy. I'm a social scientist, so I can talk about that. Maybe Sunil, not so much about the BC industry, which I'm still in the learning in the last 1 year. But yes, it's a knowledge economy. So knowledge is power. And that goes for all the sector and all the industries. So the more we exchange knowledges, the more we learn about, exchange ideas, the more diverse our perspectives are, the better are the solutions, I believe, that we can come up with, the more innovations we can come up with. Because at the center, at the core of all innovations, all wonderful strategies and all the foolproof strategies are the exchange of knowledge that we hold with each one of us. So that is the success of the community of practice, and that is why we do in collaboration with our partners and our key stakeholders, of which BCFI is the primary one. That is the reason we have a community of practice. And today's session was a great testimonial for the success of the community of practice that we are running under Testing Innovations in BC Channel project. To each one of you who are attending today and some who have texted me and could not attend, there will be a recording of this session and a report which will be circulated to all our industry partners, our potential partners, and the seekers of knowledge. So with that, I will bring this session to an end, but we also have this mandatory, say cheese session so that we can take pictures. Pritha, if you are there, that is our Marcom key person, Ms. Pritha Banerjee, usually does that. So I will request everybody to switch on your cameras and smile for 5 seconds. Pritha, up to you. Please tell us when you're ready to take the picture.
So, okay, I still see people are switching on their videos.
Should I stop smiling?
No, wait.
Is a picture taken?
Hang on, I haven't taken anything yet. Okay, okay, I think now just say cheese.
Yes.
Thank you.
Okay, thank you, everyone. We will very soon come up with our with emails will go from me about our next session on community of practice. We are going to have some wonderful gender related sessions after this, you know. And of course, gender is the underlying theme and everything. Today we did not discuss gender, but we are going to have we will overcompensate for that in our upcoming sessions on Eco India platform, where we will talk about the gender gaps. We will talk about what kind of socioeconomic conditions are there, whether they're conducive or not for the women VCs, and many other important and challenging topics that affect the VC industry. Thank you, everyone, and have a wonderful day. Bye.
Thanks
Thank
a lot.